Hey, hi guys. Welcome to another session of Finance. So this is the 16th episode of Finance session. So this week we are coming up with all new topic. It is completely about diversification when it comes to investing with stocks. So many people always say that you don't need to invest with one or two stocks. You have to diversify with different sectors of multiple stocks so that whenever there is a huge fluctuation in market, your portfolio doesn't get affected much. And when I researched more on this topic, is it good to trade with five stocks? Is it good to trade with 10 or 15? What is the best parameter or best number of stocks that one can diversify with? So when I researched about it, I found out that 10 number of stocks is the optimal number of diversification that you could do with a portfolio of basket of stocks. So when you're doing beyond 10 number of stocks, no difference with standard deviation. It doesn't deviate much at all. So whether you're doing with 10 stocks or whether you're doing with 50 stocks, your no portfolio diversification, I mean deviation will be similar. So it is always wise to do a diversification only maximum up to 10 stocks. So this is the best ideal thing to do with diversification of stocks. So in today's session, Vishal will be covering about diversification with respect to strategies. So what is the ideal number of strategies that you could diversify with?
Thank you, Kiru. Super excited to do this presentation because whenever I speak to you and we discuss a new idea, lot of thing it is like two times learning. We are teaching and we are learning ourselves as well. So that's always good for me. So I'm going to talk about diversification, and it does not come from us, by the way. The thing has come from you guys, like who are our viewers, right? So this is the presentation we did in the 15th episode where you were talking about backtesting and everything, and we specifically asked them like put out your comments, and as I can see, as usual, peak of quality content. Kiru, what you're doing is amazing work, and they wanted to know how do we trail into the option market. Then amazing start with ideation before ideation of the market behavior should come. Loved it. So there are a lot of positive feedbacks that I can see. So what we took is one of the comment, and then we started working on that as in kind of enhanced session. So I encourage everyone who are watching this video to put out in our comment section what are the topics that you want to cover in, and we are making a note of them and trying to build enhanced session on top of that. So one of the request was from King Khan, next week insight on how to design a low drawdown portfolio strategies. But how to design is one thing, but I always believe that your why should be very clear. Why you should be designing a different type of portfolio strategies, and I'm going to show you with a reason why. Okay, Kiru, no marks were guessing. Who is this guy?
Warren
With
Buffett.
Warren Buffett, and he makes a very strong statement. The strong statement is diversification is protection against the ignorance, and it makes little sense if you know what you are doing. Okay, and
The
it's a
know what to
very
do.
powerful statement, right?
Right.
You agree with him? Okay, diversification is protection against ignorance.
Okay. What does it mean essentially? Protection against market is fine. What does it mean when it says protection against ignorance?
So what I have understood from that statement is basically if you know your stuff very well and you know what are the risks involved, you should not diversify. Basically, if you are a passive investor who don't want to predict the market behavior, you will
Mm.
diversify, right? But if you
Right.
are a very good stock picker, then why would you want to diversify? You want to concentrate. And that was the precise point that Warren Buffett mentioned. So a lot of people will just take this statement and really live with it because it has been told by the legendary Warren Buffett. So it has to be right. But my experience and with the Twitter world and everything, if some handle says something with a lot of followers, does not mean it is right or it is not wrong also. You have to define what is right and wrong for you. And that's what I did. Okay. So I started with the concept that I should not diversify, I should do concentration. And in my journey, I learned something. So why would you do diversification? People say it's a risk management, it's a strategy that mix a wide variety of investment within a portfolio, hedging and all that stuff. But I will tell you a precise reason what is going on with the diversification and why you want to do it or you don't want to do it. It's a call, but you have to just go through this with me to understand what are the benefits and disadvantages. So, so I'm going to talk about our favorite strategy. What is the most favorite strategy in the Twitter right now? No,
920.
no marks for guessing. Okay. So what are the rules? Bank Nifty options. You come every day. You come on weekly expiry. You select 920. You sell call and the put, trading just above 50 rupees. Why 50 and all that? That's not what I want to do. I wanted to uh, tell you why diversification, right? And then you put a stop loss of 25%. Clear so far, Kiru?
Yeah, right.
Perfect. So these are the simple rules of the strategy that everybody knows, everybody is aware of it. And then we close our position at 325 or stop loss triggers whichever is earlier. That's what everybody has been talking and everybody's telling, that it is not making money. The strategy has lost its edge and all those stuff. Fair enough. So what we did, did a backtesting of that strategy, inclusive of cost and everything. And this is the result we got. Okay. So the result was like, okay, the strategy is decent enough, which is making a decent money for you. There are a few red months, but mota moti, there was a green months more. And obviously we are doing an option selling, which is high probability of winning. So in that scenario, it worked like a charm. Okay. Now, the problem is, okay, I just did another strategy. Okay. Now the another strategy is, the problem I'll tell you with this red months. They were like, as a trader, we always wanted to be want to be having a less number of drawdowns. So we said, okay, let's do another strategy. And obviously we talk about this in Twitter also, say time-based straddles, right? Like there are different times. So we have taken a cherry pick time, but for a point. It's not a best strategy, but it is just to give you an insight of why diversification. Everything remains the same, but rather than taking a 920 straddle, you take an 11 a.m. straddle. Okay, you come, all the rules remain same. Select the CPE trading just above the 50, and you put a stop loss, and we close our position at 325. And whenever the stop loss triggers, whichever is earlier. Very simple. Any questions so far, Kiru?
No, man. But why
At
is
least
it 11 o'clock? So the 11 o'clock is the diversified strategy that we are talking about here.
I'm going to tell you that, yeah, it's a cherry picked only. It's an optimized
Okay.
strategy.
All
Okay.
right.
But
Okay.
just to give you a strategy, just to give you a point. Okay.
Okay. Okay.
So we did this backtesting of that strategy, and that also gave you a decent payoff. Okay. The earlier strategy was giving how many points to you? If I go back,
Around
11,702. And
11,700.
by the way, this includes the slippages of 2% of round trip. Okay. And this gave also 11,784 points. Both of them give the same number of points.
Right.
Nothing changed, right?
Right.
11,000 point in previous strategy, almost 11,700 in the previous strategy and this strategy. Nothing changed, only the timing changed.
Right.
But the real fun begins here. Okay. What I've taken is some of the days where 920 straddle, say assuming from 21st June to 30th of June, was a very difficult period of 2022. A lot of people who have been trading 920 straddle will connect with it. Okay. We had 1 day loss, 2 day loss, 3 day, 4 day, almost negligible, 5 day negligible, but still a negative day, 6 days, 7 days consecutive loss. Right? Similarly, 11 o'clock strategy at that point of time had only 0.5% loss, 21% point loss, 57, 7.73, 30.65, 8.18. Obviously, people can talk about rounding because we have taken a 1%, 2% is rounding off. Okay, the slippages and brokerages. Because there are very smart people also will question you. This is wrong because you are taking a 1%. How is possible? Because we are just not rounded off, but we have put a what you call as a percentage of slippages and cost and everything also into it. Now, what was very interesting is this gave minus 125 points, whereas 11 o'clock strategy gave plus 51 points. I've taken
Right.
another scenario here where 920 worked. Okay. 39 points, 51 points, 10 points, 22 points, 60 points, 56 points, minus 30.60, but which was a very good period of 920 straddles. But not so for the 11 p.m., 11 a.m. straddle. So what we can see is this day on 4th of August, although we made 51 points, we lost around 31 points. We made 10 points here, but we lost 14 points, so negative day. Okay, this was a good days. But again, you can see both of them are just trying to kind of balance out. So when 920 had a 227 points growth, 11 had only 26 points ka benefit.
Right.
So this is what really helps. The correlation between the two is 0.08. And as I told you, this is not the perfect strategy. It will stop working in the future also. The idea here is to give you the understanding of why diversification of strategies. You can have the time-based diversification. You can have diversification based on the structure of the options. You can have a diversification across the instrument, Nifty, Bank Nifty, Fin Nifty. You can have a diversification of stop losses. You can have a diversification of the premiums. Okay, I'm just taking one example and trying to show why benefit of a diversification. So this is a table of 920. You can see in the month of 2016 June, this was minus
Right.
14.920, whereas the same June had a phenomenal 11 like AM had a 424 points growth. You take 11 AM ka straddle, okay? They were minus 36 points and minus 122 points. Whereas June, July for 920 was phenomenally well. It gave 260 points and 120, whatever, 126 points. Again, this 22 had like June has minus 131 points, whereas 11 o'clock had a 106 positive. Now, this is the beauty when you combine them. The months that we were having like a big red negative months, okay, they started turning green. The
Right.
number of greens just shot up.
And then
Interestingly, when
drawdowns
you,
also reduced.
yes, I'm going to come to that, but we never lost on our performance. This is the most eye-opening thing for me. We were making 11,700 points here, 11,700 points in the second strategy. When I added them, they got additive, right? They were adding themselves,
Right.
right? But what you rightly mentioned, the beauty start coming here. There was no compromise on the return, Kiru. Okay. So it was
Right.
11,702, 11,000. In fact, both of them got combined and gave you 23,486 points. Same. So this was the statistics of 920 straddle. And what was the max drawdown for that point? 261
60 points. Okay.
points. Whereas 11 o'clock has a max drawdown of 368 points. Both of them had a max drawdown, which is
Right.
around 200 plus, 250 plus. But my eyes opened up when I started trading out, right? When I combined them, my max drawdown became 114.
Oh,
Now, how did that happen? Is because both of them were not giving max drawdown at the same number of time or same period of time.
right. Right.
So this became like an eye opener to me, to be honest. Like my written people say that if I put some strategies, my returns will come down. The answer is if you have a profitable strategy and if you have a negative correlation with your existing strategy, your returns will remain the same. Your drawdowns will get cut down. And that's what
Right.
has happened. Like why I showed you, like in the days where 920 worked and 11 did not work. And in the previous example, 920 did not work, but 11 worked. So it gave
Right.
you a buffer and your max drawdown completely got reduced. So with this, I just wanted to, I'm not saying Warren Buffett is right or wrong, but I always say platter meal is more than tastier than a single dish, right? So if you go, it is always better to diversify your, strategies, diversify in terms of, and I think so. Rakesh Pujara keeps on always saying that there is only free lunch, which is diversification. So you keep on diversifying. You can keep on diversifying across assets, stop losses, targets, and that is where the real, crux of your steadiness in your equity curve will come from.
Very
So
true.
yeah,
Very true.
that's where
And no,
I'm going to keep it short.
with
Yeah.
respect to what you covered, Vishal, so main thing is No, when you say 920 short strategy, where you wanted to have an one more strategy which could help the existing strategy, which could no reduce the overall drawdown. So the first
Right.
and main part what we have covered is 920 strategy alone. If you take it and do a detailed study, you could see that more than 80 to 90% of the time the stop loss gets hit before 10 o'clock,
Yes.
maximum number of time. So many people know what they try to do is they come up with, say, suppose if you are using a 25% straddle, they use a 40% no stop loss, like 25% stop loss. Instead of that, they'll add a 40% stop loss. Combining together, they are trading that strategy. So the actual issue is not the 25% stop loss. No matter where you keep the stop loss, most of the time this it is going to get hit before 10 o'clock. So the ideal part is, in order to handle it, it is better to come up with a new time, so which is after 10 o'clock. So even though you use the 11 o'clock as a random example, still it justifies because we are using the additional strategy after the volatility subsides. So that is how it is able to help this strategy. So when, as you rightly said, when you're combining these two strategies together and then when you trade it, so the profitability did not hurt. However, the overall drawdown greatly reduced. That is very true, very true.
Yeah, so that's like that was an eye opener for me when I started out as well, Kiru. Like,
Right.
because I was under the assumption that if I'm going to add a strategy, my returns will go down.
Right.
But if your strategies are profitable at the end of the year, or at the end of the quarter, or a year, or after a few years, it will catch up. It's just that your difficult periods of drawdowns will significantly get reduced. And that's, as a trader, we want to know. And I always keep on saying, I like the quote by Navy SEAL, US Navy SEAL: slow is smooth, and smooth is fast. Okay, so what you do is if you don't have too much of drawdown, you're slow. I agree, but it will become smooth sailing. And once what do you call it, sailing is smooth, you can just scale up big time. So this is
That's
what
right.
has also helped us in our book as well. So I thought we can definitely talk about it.
That's very true. When you're sailing, surviving is most important. You shouldn't get sink into the ocean. You just have to survive and move through that rough phase. So diversifying with these kind of multiple strategies really helps. That too when it is highly uncorrelated with each other. That is very true. And thank you so much, Vishal, for spending your time.
Same.
Even I thought we are going to skip this enhanced session today, even because you are busy with your schedule, and even I am not keeping well. So I thought no, we might skip it, but good that we are able to continuing
No,
it.
but I respect you, Kiru. You are having your this thing minor surgery doing it, but still
Yeah.
committing to come to do this. I think so. That's commendable as well.
Yeah, I had a minor surgery on the neck, so I have to be on rest. So I thought, okay, anyways, this is not going to take much time. So I mean, moreover, this is something that we really love doing it every week. So I thought we shouldn't discontinue it. We'll keep doing it
So,
every week.
but I have to tell our viewers, we have not doing it, but guys, we are putting out a lot of good and genuine content. Please subscribe, hit the bell icon because you will get the notification through it. And please share it amongst your WhatsApp groups or Telegram groups. And I don't mind being, a bit of marketing guy because we are sharing good stuff. Why I should not be afraid of. So please, guys, go ahead and, share it with your friends, which may benefit them. You may not be aware of it, but it will definitely benefit them. So please do share them and put out your comments of what you want to cover in the coming session. So we are making a note of all your comments because we honestly are running out of ideas. We want you to tell us what are the ideas that you want us to cover, and we'll try to do all the justice possible.
So definitely
Okay,
we'll come
Kiru.
up with some other topic next week. So thank you guys. Thank you so much for your time. Have a great weekend. Thank you guys.
Okay, guys. Bye.
Bye.